Welcome, Mr. Limay. Good morning. Welcome, Mrs. Kundu. Good morning. Welcome, Mr. Bala. Good morning. You have to unmute yourself and then.
Good morning, all.
How are you, Mr. Bala?
Absolutely good, all good.
Good morning, everyone. Mr. Sabarwal. Hi, Bala.
Hi, good morning, Latika.
Thank you, Mr. Limay. Thank you, Madam Litika. Thank you, Balaji. We will be starting at 11:35. Sundareshan ji will be joining at 11:30, while Bajaj Saab will be with us from 11:40 to 1 o'clock. Good morning, Mr. Limay. Unmute yourself and then you can speak. Unmute yourself.
Good morning. Can you hear me?
Yes, yes. Now we are.
Okay, great. Thank you.
Rishant, ask Vadva ji and Ashok ji also to join.
He is joining in 5 minutes.
Who?
What was that?
Ask Ashok ji also to join.
So, how are you, Mr. Sabarwal? You can hear me clearly?
Yes, yes, yes. Yes, Mr. Vora, welcome. I know you were busy, but you had spared time. A lot of thanks to you. Lot of thanks to you.
Thank you.
Mr. Bajaj will be with us from 11:40 to 1 o'clock.
Okay.
Mr. Ajay Bagga will be there from 11:30. Mr. Sundareshan from 11:30. Mr. Sundareshan will also be there only up to 1 o'clock. But in that post session, we have requested Ajay Bagga ji to coordinate with Navneet Manod ji and Nilesh Shah ji. But whomsoever among you will be there, he will be asking questions to like Mr. Limay or whosoever will be there after Mr. Bajaj has spoken. So he will be asking questions from them also. Opening I am moderating, while the next section will be moderated by Mr. Bagga.
Okay. So this is similar to what you have sent me in the morning, right? In terms
Yes,
of
yes, 100%.
Yeah.
Sir, what we have decided is Mr. Vadva will speak for 3 minutes, Mr. Ashok Agarwal for 4 minutes, all MDs, all the 8 MDs and CEO for 5 minutes each, and then Sundareshan ji for 10 minutes and Mr. Bajaj for 10 to 15 minutes.
Okay. Fair enough.
That's what I have taken approval from Mr. Bajaj accordingly.
Okay. Fair enough.
There is an effort that maybe between 1 and 2, MOS may be joining for 5 minutes from Kashmir. We are making efforts for that.
Okay.
That there is not connectivity in the remote area of Kashmir where MOS Mr. Anurag Thakur ji is there. But we are making efforts that for 2-3 minutes to bless to this investor program, he may be joining.
Okay. Okay.
But it will not be in the opening session.
Okay. Fair enough. Thank
ठीक है, ठीक है. Good morning and welcome, Mr. Vijay Kumar.
Good morning. Good morning. Mr. Sabarwal ji.
That's great, great. How about you?
Good.
Thanks a lot for joining, sir.
Not at all. Pleasure.
नमस्कार सबरवाल जी।
I have received a message from Mr. Reddy that he will be joining late, and if he will be, because he has some presentation to the board, but he will certainly be joining. If he will be late by the time Mr. Sundareshan ji has to speak, then he has advised me that he may speak in the concluding session, and you can speak for 5 minutes in lieu of him.
Okay.
But he is making his efforts. He is giving some presentation to the board. That's what his message came. Vivek ji, good morning.
Good morning, everybody.
Good morning.
Ashok ji, good morning.
Okay.
Good morning.
Where are you? Good morning.
Yes. Neil ji, good morning. Mr.
Good morning.
Yes, good morning.
Hi, Nagesh. Good morning.
Hi, Neil. Good morning.
Hi, good morning, everyone.
Hi, Bala. Good morning. Hi,
Hi.
Latika. Good morning.
Hi, good morning. Good morning, everyone.
Good morning, everybody. Yeah.
Hi, morning, everyone.
Good morning, Mr. Nageshwar Rao.
Good morning, Mr. Lime.
Good morning. Good morning. Good morning, everyone. Morning, everyone.
Balaji, good morning.
Morning,
Vijay
Ashok ji.
Kumar ji, good morning. Rishi, good morning.
Morning, sir. Morning,
Ritika ji, good
everyone.
morning.
Good morning, Ashok.
Yeah.
Good morning to everybody.
Good morning, Vivek
Good
ji.
morning. Morning, morning.
Good
Good
morning.
morning, Bala sir.
Hi, good morning.
Good
Vivek.
morning.
Good
Good
morning.
morning.
Rishant, President Saab is not there still.
He is joining, sir.
President has joined.
Sir, good morning.
Good morning,
Good
Gulwa ji.
morning, everyone.
Good
Morning,
morning.
morning.
Good morning to
Good
everyone.
morning. Good morning.
Good morning, Kamlesh.
Morning.
Morning, Mr. Abla.
Good morning, Kamlesh.
Good morning, sir.
Good morning.
Good morning.
Good morning, Mr. Kamlesh.
Good morning, Latika ji.
Sabharwal ji, at what time you will start? You are on mute, Sabharwal ji. You are on mute.
Sir, 11:35 we will start. 11:40 to 1 o'clock, Bajaj Saab will be with us.
Okay. 11:40 to 1 o'clock. So you want to start at 11:40?
Sir, I will give the introduction type before. I will straight away, once Bajaj Saab joins, I will straight away hand over to Mr. Varma.
Okay.
Because
Again, you are on mute. Sabharwal ji, again you are on mute.
वो मैं तो नहीं करता हूँ सर, होस्ट कर देता है.
अच्छा. होस्ट को बोलो आप कंडक्ट कर रहे हो.
उसने सर दिन रात मेहनत किया पिछले दो उसमें.
आपने उसको डाटा ज्यादा होगा इसलिए आपको बार बार में म्यूट कर रहे हैं.
बट सबरवाल जी की आवाज को कोई म्यूट नहीं कर सकता.
आज उनके हाथ में है सबरवाल जी को म्यूट करने का.
सही है. योर पार्टिसिपेंट्स आर इंक्रीजिंग फास्ट. गुड मॉर्निंग सुंदरेशन जी. सुंदरेशन जी, गुड मॉर्निंग.
You have to unmute.
He's on mute.
Mr. Sundareshan.
Very good morning to all of you, sir.
Very good morning, sir. Very good morning.
Very good morning.
Good morning, sir.
Good morning, Sundareshan ji.
Very good morning, sir.
Morning, Mr. Sundaresh.
Yes, very good morning.
Morning.
Good morning, Sundaresh ji.
Very good morning, sir.
Sir, good morning.
Good morning, sir.
Good morning, Mr. Sundaresan.
Very, very good morning to all of you, sir. Very nice to see all of you here.
Morning, sir.
Nishant, only Ashish Chauhan ji is left. You can speak to him, Mr. Ashish Chauhan.
Okay, sir.
Good morning, Mr. Bagga.
Good morning, Ashok ji. Good morning, sir.
How are you? Yes.
Narendra ji, good morning.
Yeah.
Sabarwal sir, good morning, sir.
Very good morning, Baga Saab. Lot of thanks to you. Though your session is late, you have joined early. Lot of thanks to you.
Thank you.
Good morning, Ajay.
Good morning, sir.
Morning, Mr. Baga.
Yeah.
Hello, madam.
Good morning.
Good morning.
Sabharwal ji, Mr. Bajaj has logged in.
Welcome, Mr. Bajaj, and good morning.
Good morning, Bajaj Saab.
Rishant, please follow up with Mr. Ashish, and then we'll start. All other honorable panelists have joined. I am not able to see Ashish Chauhan ji.
Sir, he told me that he will be joining at 12. So a bit late because there is an internal meeting, so we can start.
I think we can
Yes,
start.
sir. He will be joining at 11 after 11:50.
Welcome all honorable panelists and all honorable participants in today's webinar on the investor awareness. Actually, it is a part of that IASCO event where the SEBI and other members are there for last 4 years. IASCO is celebrating the investor week. Normally it is celebrated in the first week of October, but this time IASCO guided that it can be celebrated any time between the October and November, and the our regulator SEBI decided it to celebrate it between 23rd to 29th of November. CPI is actively participating, and we have done various programs in last 5 days with most of the exchanges. Even today, one event is taking place with Lovely University along with MCX. For last 4 years, we had been participating in it, and it is my pleasure to inform that the government, represented by the Additional Secretary, Financial Market, Mr. A.M. Bajaj is with us. The regulator is being represented by one of the senior most executive, the officer of the SEBI, Mr. Sundaresan, Executive Director, who is in charge of the commodities as well as the surveillance. He is with us, and we are that all the 6 exchanges, MD and CEO are with us, and both the regulatory, both the depositories CEO are also there with us. as we will have a shortage of time, I will do it this way that first of all, my president will be speaking for 3 minutes for welcoming address. Our chief mentor, Mr. Ashok Agarwal, will discuss the theme of the subject for 4 minutes. To all the 8 managing directors, we will be giving 5 minutes each, and after that, 10 minutes will be there for the executive director, SEBI, and the government nominee, Mr. Bajaj, will be speaking for about 15 minutes. So we will try to conclude this session between 12:55 to 1, and the concluding remarks in this session, vote of thanks in this session will be done by Mr. Vivek Agarwal, the chairman of CPAI, East India, Eastern region. The second session on the economy as well as the current market scenario, where Mr. Navneet Manot, Mr. Nilesh Shah, and Mr. Ajay Bagga will be there, will be moderated by Mr. Ajay Bagga. I have just about 15 minutes back, I have requested him and he has very kindly consented. And for the day's proceeding, the concluding remarks and the vote of thanks will be given by our Vice President, Mr. Kamlesh Shah from the Share India. Over to you. I will not be giving much introduction because the timing will are short. I will straight away will be inviting all honorable dignitaries to speak, and then straight away I hand over Mr. Narendra Wadhwa, and I request each honorable panelist to please stick to the timings. Over to you, the National President of CPI, Mr. Narendra Wadhwa.
Thank you, Sabarwalji. Good morning, everyone. Shri Anand Mohan Bajaj, Additional Secretary, Ministry of Finance, in charge of our financial markets. Shri Sundareshan ji, ED SEBI, Shri Ashish Chauhan ji, and Mr. Vikram Ramaya, Mr. P.S. Reddy, Mr. Vijay Kumar, Mr. Nageshwar Rao, Ms. Litika Konda, Shri Nehal Vora, Shri Balaji, and Ashok ji, our mentor. आप सबका बहुत स्वागत है आज के वेबिनार में। ये वर्ल्ड इन्वेस्टर वीक 2020 का हमारा आखिरी इवेंट है।
Continue, Mr. Wadhwa.
Continue. Yeah.
Okay. I sincerely thank all of you for attending this event, a wonderful initiative by ISCO and our regulator SEBI, a week-long celebration for investor awareness and financial literacy. As mentioned by Sabarwalji, World Investor Week is a worldwide campaign promoted by ISCO to raise awareness about the importance of investor education and protection. It is held every year in the first week of October, but this year due to COVID, it is celebrated throughout October, November in a different jurisdiction. In India, we are celebrating it from 23rd to 29th. We all know that we are a country of savers. Saving habits are in our blood. So this week is a great opportunity which was given to us through this initiative to interact directly with the savers and investors and run a awareness program for them to know about saving and investments and the process of creating wealth, especially for the new and first-time investor. One point I want to make here, currently 3 to 4% of our population is participating in the markets, whereas this figure is 30 to 40% in developed countries and 15 to 20% in developing countries. Our household saving, current household saving is around 17 lakh crore at $2.5 trillion economy. It is estimated that we will be saving around 40 lakh crore per year at $5 trillion economy. So huge opportunity and long way to go. As there is a huge opportunity for us, at the same time, there is a responsibility on us also, all intermediary, We have to strengthen the investor confidence in markets through our conduct and continuously engage in investor education. We are in a service industry dealing with the investment and clients' money. There is no iota of doubt that we have to be customer centric in all our business processes. We have to conduct our business ethically in a dignified way within the ambit of law to achieve continuous growth in our businesses. This week, CPAI has conducted number of programs, quizzes on investor awareness and education, used multiple formats for investor-oriented programs like webinar on various investment classes and webinar on topics like financial product suitability for various types of investor. When one start investing in we have also discussed when one should start investing and financial planning in his life. We also discussed about do and do nots about for the investor for their investments. We also deliberated on different topics like what we should do for more financial inclusion and market participation and how to enable easy onboarding. Today, in a concluding session of ISCO Investor Week 2020, we will discuss opportunities in various asset classes and benefit of long-term, regular and diversified investment. We have eminent speakers and top market gurus for this. We believe calendar year 2020 will be remembered for unprecedented and sad phase of COVID, and also will be remembered as a year of biggest foreign and domestic-led and equity-driven rally in the history of Indian capital market. We think there is a case for big asset allocation shift for domestic investor to equities and various other financial assets. Thank you once again for participating today. Happy investing. Request Sabarwalji to take it forward. Thank you.
Now I request Mr. Ashok Agarwalji, our chief mentor, who is incidentally the largest clearing member of the country and the chairman of the Globe Capital, to introduce the topic. Mr. Ashok Agarwal, though I know that he can speak for, he is an excellent speaker and speak for quite long, I request him to stick for 4 minutes. Mr. Ashok Agarwal.
Thank you, Sabarwalji. Good morning, everybody. Sri Anand Mohan Bajaj, Additional Secretary, Ministry of Finance. Sri V.S. Sundaresan, Executive Director, SEBI. Sri Vikram Lime, MD, National Stock Exchange. Sri Ashish Sohan, in absentia. Sri Nisi Nathani, Sri Vijay Kumar, Mr. Nageswar Rao, Mr. Nehal Vora, Mr. Ajay Bagga, our President Sri Narendra Wadhwa, Sabarwalji, Kamlesh Shah, Vivek, and all the dignitaries in the panel, and top of it, all the participants and the investors. Good morning. I think we are talking about Investor Week, and the idea is to focus on investors. And you know, we have one day devoted to Women's Day, this day, that day, but because the importance is great, we are devoting one full week for the investor. So that shows the importance of investor. And as Wadhwaji said, India is a country of savers. So question is, where should the savers invest their money? And should they invest the money in capital market, and in the capital market also in equity? So what is the justification? Friends, let us say there are two investors, one who invests in capital market and one who is not investing in capital market and is investing in some other asset class. Now, if we look at the data over a period of time, I will take, let us say, Nifty. If Nifty, the base year is 1995 November. If somebody has invested in Nifty in November 1995, today the investment, the base is 1,000 rupees. The investment is worth 13,000, 12,900 something. So almost 13 times. And let us say April 79, Sensex. If somebody has invested in Sensex base is 100 rupees. Today that is worth 44,000. So 441 times. Any other asset class will not give you that kind of return. You know, over a period of time, investment in stock market has given you around 15% compounded annual rate of return. If you invest, let us say, in fixed deposit, even though today the rate of interest in fixed deposit is only 5%. But even if, let us say, we take earlier rate of 6%, 7%, the return is only 6 to 7%, and that is taxable. In stock market, you pay only long-term capital gain tax of 10%. So there is a tax advantage. In fact, earlier it was 0, but now even with the latest, you only pay 10% tax. So it is very rewarding. In fact, gold, gold in, I'll just compare, April 79, gold was 937. So somebody who has invested in gold, now today it is worth 48,000. And if somebody invested in gold in 1995, the rate was 4,680. Today it is worth 48,000. So gold has given you a return of 10 times. So if you calculate the compounded annual rate of return, it is 8%. So gold has given you 8%, but capital market gives you 15% plus compounded rate of interest, rate of return. So it is very rewarding for you to invest in capital market. But the point is, if you come to the market and expect to double your money, जैसे अभी लेटेस्ट फैड है, रिस्क में ही इश्क है, you know that series, Harshad Mehta series, there was a slogan, risk में ही इश्क है, and now investors are talking about risk में ही इश्क है. Friends, let me warn you, risk में इश्क किसी particular आदमी के लिए हो सकता है, but not for you. If you are somebody who borrows money and invests in capital market, specifically in equity, this market is not for you. 90% plus speculators lose money in capital market. So if you are speculating, I think there are very great chances that you will lose money. As the saying is, don't time the market, invest time in the market. So time in the market is more important than timing the market. Of course, diversify your portfolio, diversify your risk. Don't invest all your money in equity. Invest some part of it in equity, invest some part of it in gold, keep some money in fixed deposit, keep some money in debt instrument. In fact, nowadays, even G-Secs are there, which is 100% secured because it is a government of India instrument and it gives you very good return and it is liquid and you can even use it as a margin for your trading in the stock market. Of course, as a broking entity, as Mr. Wadhwa said, we are a trustee of investors' money. So because we have a special privilege, if you as an investor want to trade in the market, you can trade only through a registered broker. You are not allowed to trade independently. So we have this privilege, but we have to make sure that we don't misuse the privilege. We have to make sure that we don't do anything which will cheat the investor. We have to make sure that we keep the trust and we are a trustee and we should not break the trust. I will not take long. I think we have a very elite panel. But what I would like to say, investing in capital market and more so in a country like India is very rewarding. Do invest your savings. Don't invest out of borrowed money and don't diversify over your portfolio. Just one more comment. You know, in share market, you can invest in equity, you can invest in commodity, and you can invest in currency. Let me tell you, when I'm saying be a long-term investor, the parameters are different for commodity and equity market because commodity market, except let us say bullion, if you invest in agri commodity, it cannot be an investment. It can be either trading or hedging. Even in currency market, it cannot be investment, because if you invest for long term in commodity or currency market, it may not work. It may go against you. But in equity market, invest for long term. I think investment in India is going to be very rewarding, and we are in for some exciting time. And I think we have one of the most efficient capital market in the world. We have T+2 settlement, which can be even, we can go even to T+1. We have 100% demat. We have 100% screen-based trading. Our trades are guaranteed, and we have one of the most efficient regulator in the world. So invest in the capital market, but for long term and out of your savings. Thank you very much.
Thank you, Mr. Agarwal. Before I call among the 8 managing director and CEO, will be starting with Mr. Vikram Limai, the largest stock exchange of the country, second largest, third largest in many aspects, which I am not straight away telling here. But to my chief mentor and to my president, I will like to tell that day before yesterday, when we conceived the program, they were doubtful that whether we will able to have the participants here. They asked me that how many participants you feel can come. I gave them a figure of 200. I am happy to inform that we have already reached 210 participants here. And not only that, this program is live on YouTube also, where already about 50 people have logged in. The program is also live on the YouTube, and about 50 participants are there on the YouTube also. Over to you, Mr. Vikram Limai, the person of the country, Mr. Vikram Limai.
Good morning, everyone. Thank you, Sabarwalji. Shri Bajaj, Shri Sundareshan, other colleagues from the Market Infrastructure Institution, Shri Agarwal, other dignitaries, Shri Wadhwa, and other dignitaries of CPAI, and friends. Again, good morning to everyone. The World Investor Week is a week-long global campaign promoted by IOSCO, and in India, SEBI is the national coordinator. For the past few years, NSE has been actively participating in the World Investor Week to raise awareness about the importance of investor education and protection, and highlight the various initiatives of securities regulators in these two critical areas. This year, NSE has marked the occasion of World Investor Week on the 23rd of November with the Ring the Bell ceremony, and more than 500 investor awareness webinars have been conducted during this week. We've also launched a unique initiative which we called Be Your Own Lakshmi, which was focused towards young women earners and women entrepreneurs. And this has been a huge success where more than 2,500 women participated. NSE has a very elaborate investor education and awareness program, which is actually across 600 plus districts, which is pretty much the entire country, and includes over 4,000 awareness programs that are conducted every year. And these are through digital programs. We have several partnerships, because in order to achieve scale and reach all parts of the country, unless you are able to deliver these programs digitally, that is actually not possible. Such initiatives have contributed significantly to improve retail participation in India over the years. NSE has witnessed more than 1.5 crore new investor registrations in the last 5 years, of which more than 36 lakh new investors were onboarded in this fiscal year. Since the launch of the commodities derivative segment on NSE, more than 250 commodity-focused programs have been conducted pan-India to spread awareness amongst the target groups such as traders, jewelers, exporters, importers, and various industry associations. The exchange is dedicated to deepen the Indian commodity markets by providing convenient and cost-effective onshore hedging products. Since commodities are frequently used as input in the production of goods and services, uncertainty and volatility in commodity prices and raw materials makes the business environment volatile, unpredictable, and subject to unforeseeable risks. ability to manage or mitigate risks by using suitable hedging in commodity derivatives can positively affect business performance. Futures and options are by far the most common commodity derivative products offered on any exchange. And these are well structured and regulated through robust mechanisms and controls by SEBI and the exchanges. Currently, futures and options on commodity derivatives at NSE are available on bullion and energy. NSE is also in the process of launching its first agri-commodity futures contract for crude degummed soybean oil on December 1st, 2020. This contract will facilitate the soybean oils processing and allied industries in India and overseas, and we look at it as a perfect hedging tool for managing price risk. Shri Sabharwal and Shri Agarwal have spoken about, and Shri Wadhwa have spoken about various aspects of the Indian market and the fact that an investor has to really be careful about what he's investing in. He has to take the time to get educated about the market, and making sure that trust in markets is strengthened and maintained is absolutely critical for the development of our capital markets. We believe that an educated investor is a protected investor, and have always been encouraging investor education through our motto, Soch Kar, Samajh Kar, Invest Kar. The launch of the platform for investor education in collaboration with IIM Bangalore is another milestone in our continuous efforts towards investor education. This platform is a unique platform that imparts investor education in simple, easy to understand video, audio, and other digital media formats in 5 different regional languages. We're seeing increasing participation from tier 2, tier 3 cities, and it is therefore critical that we focus on investor education in regional languages as well, beyond English and Hindi. NSE plays a critical role in working with SEBI, government, other regulators, and market participants in the development of capital markets. NSE has always focused on what is in the best interest of the Indian economy, markets, and investors, and in improving the financial well-being of people. We recognize our responsibility to help India achieve its aspirations and take its rightful place amongst the world's leading economies. Once again, thank you very much.
Thanks a lot. Thanks a lot to the largest exchange of the country. I should have given more time, but I'm really sorry that.
Good morning, Ashish ji.
Please unmute, sir.
Sabharwal Sahab,
Ashish ji, and Ashish ji has just joined us. Welcome, Ashish Chauhan ji.
Good morning, sir.
Good morning, sir. And Ashish ji, Mr. A.M. Bajaj, Mr. Mr. Sundareshan, and all the 8 exchanges CEOs are with us. Mr. Ajay Bagga also. Mr. Reddy only will be joining later. So I now straight away hand over to Mr. Ashish Chauhan to take it further forward. Mr. Ashish Chauhan.
Dhanyawad, sir. Thank you. I would like to thank CPAI for giving us this opportunity to be here today morning. It's a good week in terms of the Investors Week, which we are all celebrating, that IOSCO decided, and I think SEBI has taken in right earnest. So all of us are trying to contribute to the investor awareness. Without investors, we are nobodies. And that's where I think we are all, as a community, doing a great service by giving an alternative opportunity for investing in different asset classes to the investors by advising them. And this community of brokers have done this for officially for more than 140 years, and informally plus officially put together almost 200 years in modern India. The trading of bonds of banks in Calcutta started somewhere in early 1900. I mean, early 19th century, 1820s and 1830s. And now we are in 2020. So almost 200 years have passed since the business of broking and advising customers, getting them into different asset classes has happened. And the formal setting up of BSE happened in 1875. Since that 145 years, what we have done is to create that trust. What we manufacture as an industry is basically trust. And trust is easily givable. We can give up trust easily, very difficult to build. And this trust that has been built today is so much that a person sitting in Jammu is able to invest even 1,000 rupees into a company in Salem near Coimbatore in Tamil Nadu, which she is never going to visit. But she has that complete confidence that Indian stockbrokers, Indian exchanges, Indian regulators like SEBI, ministries, all the police and everyone put together, her money will go to the right place and that money will be used properly. And if that business in which she is investing in makes profit, then she will get her share of that profit. How important that trust is, because what we actually deal in is what I call partnerships. These are large partnerships, limited liabilities, but effectively people who are unknown to each other, even a Japanese housewife, an executive in Canada is investing in Indian markets. Today, Indian markets have reached more than $2.3 trillion of market capitalization only in equities. If you take bonds and commercial paper, now we are close to $3 trillion. India's total wealth is around $9 trillion. Out of that, $3 trillion, that is 1/3 of India's wealth, is in that trust you guys create, right? And that is what I think is a great achievement, and I think all of us should be justifiably proud of that. Now that I told you about our past, which is glorious, how do we make our future that is glorious? And of course, I mean, for us to be having glorious future, India's future has to be glorious. So what we do as a stock market, just $2.3 trillion of equities is now larger than the entire banking system in India. Entire banking system in India is now close to $1.6 to $1.8 trillion. Add up all banks, add up all their balance sheets on one side, not two sides, and you will not reach $1.8 trillion. The stock market, equities, that Satta Bazaar we used to call, has now become larger than the most protected industry, that is banking in this country. Why? We are more trusted, we are more trustworthy, and that we need to continue. Why we do this is because the savings of the economy are generally in households, and we provide an alternative avenues to channelize those savings in productive capital. And that is what we have done. And for me, it is immensely proud moment for all of us to recalculate or revisit the achievements we had. Now what has happened is that technology has changed so much over the last 20-25 years. It's changing so rapidly that many of the small brokers are feeling the heat. Even the larger brokers are feeling the heat. The regulations are changing so fast. And so how do we now use, we are also the most compliant community in the country. We know how to read regulations, how to read changing regulations, how to adjust to that. And that's where I think our expertise probably we can use in getting more people service more in channelizing their savings formally into other areas like insurance, in SMEs, in mutual funds, and so on and so forth. BSE has taken leadership in all these areas. And my request is you guys also should take serious look at just not being in stocks or equity derivatives or currency derivatives or commodity derivatives, but also expand your horizon, because you are the most trusted people. You are the most compliance oriented people. And I think there is a need to channelize our savings into many aspects. And I think it will be good for the CPAI and other people to take leadership in making our members think that how do we, because we touch investors every day by variety of ways, right? How do we become more service oriented for them? How do we give them more and more products which are safer, which actually enhance their risk management capacities, like in insurance, in life, general, auto, health, whichever way, or in just giving government bonds or sovereign gold bonds or any such thing, or mutual funds. There are 40 mutual fund AMCs, and there are literally 6,000 plus schemes. How do we sell them those and ensure that their money increases? And that's where our prestige increases in the country. And of course, the educating investors. For me, the investor who is educated is also the protected investor. An ignorant investor can never be protected. And that is why it is all our job that BSE continues to make almost 6,000 to 7,000 such seminars or webinars, participate in these webinars. Literally every day, almost 25 events we are doing since last several years. And we'll continue to do that. But in the size of India, even 7,000, 8,000 numbers are not sufficient. We also take help from organizations like CPAI, BSE Broker Forum, and me, also television channels, newspapers, media, to and continue to tell the investors that do what is correct for you, do what is correct for your families in your situations. Don't get impressed by the SMS and WhatsApp you get, or what you hear in television or in newspapers. But study about things, and if you are not expert, go through mutual funds, go through portfolio management services of the members, and so on and so forth. But ensure that if you keep your money in pillows or in your mattresses, it's going to go down in value. If you invest in stock markets, just to give you a perspective, in 1979, 1st April, Sensex was 100. If you had just invested in the Sensex companies and kept on changing with Sensex companies in that proportion, today you would have got 44,000 rupees as a capital, and over and above that, 14,000 rupees extra as dividends over this 40-year period. That is, you would have got 58,000 rupees out of your 100 rupees. There is no asset class in the country today or in the world which has given that returns.
Ashish, sorry for interrupting you. You joined late. We had allocated 5 minutes each for each MD. Please.
No, my apologies. Thank you for calling me again, but I am delighted to be here, and I wish this day full all the best. I hope we all will be.
Mr. Sundareshan, Bajaj will be speaking later.
Thank you, sir.
Thanks a lot. Mr. Reddy hasn't joined us yet, so I am now requesting Mr. Vijay Kumar, the Managing Director of NCDEX, to put forward his point. Mr. Vijay Kumar.
Thank you, Sabharwalji. So it's great to be at this function organized by CPAI. I think CPAI has been always driving the awareness building along commodities well before it merged, the FMC merged with SEBI. So I think in that sense, it's been a pioneer and continues to have that sharp focus and that dedication that's required for commodities, which still is maybe the smaller side of the entire investment scope. So let me start by addressing three issues. So the first, I think, is the term investor itself. I think maybe there's a need to broaden this term investor to say investors and hedgers, because while one of the roles of these markets is to attract investors and to allow that investment to move into risk-taking capital, needing investments for starting companies, the commodity markets have been designed and operated primarily for hedging risks that are already existent in the commodity space. And that is risks taken by farmers, traders, processors on the physical side. They already have those risks. And so the primary role that the futures markets or the options markets serve is to encourage them to hedge those risks. So I think one of the widening of this terminology will certainly help in addressing that audience. And I would encourage members who typically have been leaning towards the retail investors or institutional investors to move towards or to spend more time and effort on addressing this audience of traders, processors, and farmers and FPOs. And I'm saying this because 50% of the livelihoods in India are of farmers and FPOs. And I am really delighted to say that with the help of SEBI, NCDEX has launched a lot of webinars which have been helpful in encouraging these participants to get onto the platform, and it has transformed the way farmers and FPOs today are conducting their business. And I think these are the first steps, but we are extremely gratified by the progress being made. And with the support of SEBI, and Mr. Anand Mohan Bajaj is here and has been an active supporter of these sort of and an active proponent of the potential that these markets can have on the economy by farmers and FPOs using market-led instruments for their price protection. So even as we speak, November, farmers and FPOs are planting their crops and they are hedging their risks by locking in the price for April, March and April. So that's actually the remarkable use of these markets, and it's really gratifying to see it touch livelihoods all across the country. As far as NCDEX is concerned, we certainly are we have smaller funds deployed for this, but again, I would urge all exchanges, all members, and especially banks to play a wider role, because it's not just an exposure of farmers and FPOs. These exposures are by banks. The largest agri-businesses are funded by banks. The largest priority sector lending is by banks. And if banks can encourage hedging or persuade hedging and even mandate hedging, and RBI, I think, has gone half the way. It would be great to see a full move towards insisting on the type of hedging that has been insisted for the currency markets. And I think we believe that these markets will play their economic role once this entire transition occurs. The second aspect that I'd like to touch on is that hedging is not a decision, it's an habit. And unfortunately, I think this habit hasn't been ingrained fully, despite guidance from RBI and certainly more disclosure requirements from SEBI for listed companies. I think this needs to be stretched further. Rating agencies have certainly begun to look at these disclosures and possibly downgrading those sort of companies that are not hedging. But I think we've still continuing to see a lot of NPAs and a lot of bankruptcies in the commodities sector or in companies which have a significant exposure to commodity price risk. And we think that it will really be helpful for RBI to begin to mandate at least a certain percentage of hedging by all entities involved in the commodity space. And that includes traders and processors in the agribusiness space as well, apart from metals and gold and so on and so forth. The one last aspect that I'd like to touch on is institutional participants. It's great to see CPAI having invited mutual funds in the second half of this session. I think SEBI has played a huge role in getting these institutional entities into in the commodity markets. One of the roles of these markets is to transfer risk from those who cannot handle it, which are farmers, traders, processors, or should not be handling it, to institutional investors or institutional entities that can take on that risk and also manage those risks and also profit from those risks. So I think we are seeing the first of the mutual funds actually having taken their steps in the commodity space. We believe that mutual funds will play a phenomenal role in the development of these markets. And it's really, I mean, just last week we had a session with Nilesh Shah, and we believe that the mutual funds and the AIFs will play a huge role in helping this risk transfer from participants that should not be holding risk and should be hedging it to these mutual funds. So with that, I will sort of have the rest of the program go on, and I look forward to wider impact of these markets and for CPAI to really continue its good work to propagate these in the months and years ahead. Thank you.
Thanks a lot, Mr. Vijay Kumar. Thanks a lot, Mr. Vijay Kumar, for the kind words. As Mr. Bajaj has to leave by 1 o'clock, now the next CEOs, I will be restricting them with my humble request to 4 minutes each only. Over to you, Madam Litika, the CEO of the MSCI.
Thank you, Mr. Sabharwal, and thank you, CPAI, for hosting today's session, the concluding session on the World Investor Week. I think a very key aspect that, of course, most of us have been touching across the week, and even some got touched this morning. Ashish spoke about the educated investor being better than the ignorant investor, and I completely agree with that one, because unless we don't understand as to why or how or what are we investing in, and how do we go about it, as well, what are the risks involved, the investor would not be able to make the right decision. normally we see that, investors or even just people who can, who do become investors eventually celebrate on, buying a new house or a car or any other such material aspect which is celebrated by society as a whole. But when it comes to financial planning, it is hardly, there. I mean, there are very few households that actually have specific goals, specific clear financial goals. And I think that's where the big gap comes in, where you see that there could be savings, but they're channelized more for other non-financial areas rather than into the financial space. So I think that's one very important thing where we need to start having, people who are not in the investor space, who are not yet investors, to become investors and to understand as to how, whether it is Sensex from 100 moving to 44,000, or Nifty moving up and giving another this, or tomorrow the MSC index giving another benefit. So I mean, each, not only just on index basis but on any other financial instrument. And Vijay Kumar highlighted one very key aspect of not just investors but also hedgers. I think that's also a very key aspect, because some of the products would really be multi-pronged. You need to go across them. If you're in the commodity space, you probably need the currency market there. And I'm not sure whether the investors have even fully imbibed into the equity space till now. We have seen numbers, we have spoken of them in the past, and we've seen there's a huge gap from where you find people who are spending, or they're saving and they are spending on regular homes and cars and other luxury items and goods, but they are not really investing. They are not investing into, because they haven't really put financial planning as a key. So I feel that is highly important. It is very important that they do see as to what is that vision that they have for the next 20 years, next 50 years, for the next generation. And of course, investor protection and all of that is there. An educated investor will learn more. We do see millennials who are participating much more, but I think that's more again in the short term and not in the long term. The advantages we have been speaking about this morning and throughout the week have been more of long term investing, and in that direction as to what comes back to you, making sure that you do have a well understood uh, plan, as well as you actually are able to use your proper savings and not just borrowings, as Mr. Ashok Agarwal highlighted earlier, that when it's on borrowings, it is a very different type of an investment you would make. Whereas if it is on your own savings, if you are making the investment, it is completely different. So I'm hoping that, all out there who are not yet investors will come back and become, investors before the next World Investor Week of 2021 comes in, and we have them more educated, as well as at the same time more goal oriented towards what exactly they need to achieve, or what is it that they should look for in terms of a return back from these markets. With that, I would like to once again thank everyone. And
Thank you, madam. And now I straight away hand over to Mr. Nageshwar Rao, the MD and CEO of NSDL. Mr. Nageshwar Rao.
Yeah, Mr. Sabharwal, thank you very much, and thank you very much for having me in this event. And in fact, so my colleagues have already made most of the important points, and therefore, so that I would like to keep my remarks short, so to meet your time objective as well. So I think one key point I would like to make is that India has now entered into a low interest rate regime, which I would say, as I've been the point I've been making in other forums as well, that it's the most powerful driver in all Western markets to increase retail participation, because as the interest rates go down, it's extremely difficult for people to make a return on their savings. So where do I invest actually becomes an extremely difficult question to answer, and because people have to make a lot of choices in terms of risk. And therefore, of course, I think investor education, investor awareness is extremely important in an environment of this nature. And the second point I would like to suggest is, of course, that a lot of us are actually spending a lot of time and effort on, investor education. And what I think is something that we can potentially do is to set up an online method of investor education in a centralized portal. Because everybody's efforts are are in different directions. So I would suggest actually, so as an initiative, the capital markets industry should come together to set up an online portal where all of us can provide content. So therefore, so any investor can have on-demand content available to him to answer his questions. And also, of course, that is one place through which webinars like this can be held, and each one of us can hold webinars, and any investor should be able to go to that portal and see what are the upcoming webinars, register himself, and of course, and be able to view. So these are the two key points I wanted to make. It's becoming a very important activity, investor awareness, and I think we should make it also easier for the investor to access the investor education programs as well as the material. Thank you very much for having me.
Thanks a lot and special thanks for taking the least time. And now, straight away, I am handing over to Mr. Nehal Vora, the MD and CEO of CDSL. He was busy today in some other event. He skipped that and he has joined with us. So, one thanks to him for that too. Over to you, Mr. Nehal Vora.
So, first of all, I would like to wish everybody a very, very good morning. Thank you, CPAI, for really inviting me, especially Mr. Sabarwal. I think the World Investor Week, which we are celebrating in this week under the overall supervision of the Ministry of Finance and SEBI, is a very, very important motto. And that leads to three themes which I would like to touch upon. Most of the points my colleagues earlier had done, and I would like to stick to the timeline which has been given. The first important theme is there is regulatory cooperation. I think I don't think I've seen all my colleagues from the MIIs so often as in probably in this week, where we are all coming together, not as competitors, but as a regulatory cooperation in the very important perspective of investor education and empowerment. I think a common line of cooperation across all the stakeholders, be it SEBI, Ministry of Finance, and the market infrastructure institutions and the intermediaries at large, is to ensure that the investor is empowered. The second point is that normally the popular saying goes that the glass can be seen as half full or half empty. And the general trend which I see in most of the investor education programs is that we are focusing on what should not be done. I think there is a need to even celebrate on where people are going right. I think a positive motivation in these programs will encourage a lot of people in using the self-help tools, the do-it-yourself tools, which all the MIIs are putting out. I think India is one of the unique jurisdictions where, though the business is conducted in the securities market as a B2B concept, the information flow is a B2C, where the MIIs directly reach out to the investors to directly check their details straight away with the MIS. That brings in a lot of transparency, a lot of objectivity, and also ensures that the conflict of interest is not really coming in the way in the information flow. And the third and the most important point is that, which point has been raised by the few speakers earlier, is about trust. I think I think the most important thing is that today in the securities market, we have a significant amount of growth in the number of investors which have been participating. And the trust, the biggest testimony is during the lockdown, we've seen a stupendous growth in terms of the new investors coming into the fold. This testifies the trust which we as an ecosystem have put together, that even in the worst of times during the pandemic, they believed that the securities market infrastructure was safe enough for them to put their hard-earned savings and participate in huge numbers. This should become an encouraging point, and it has led to another important communication protocol, that we have been able to communicate each other through an offline or through a video conferencing mode. Why can't? And that's the point that Nagesh made. I think that is a very important point, that if we can cooperate on the investor education through an online portal, it can actually complement the efforts of various stakeholders to putting in something which is a joint initiative, so that we are kind of increasing the width and depth rather than all of us going to the same area. This will lead to a wider participation, increasing the width and depth of the market, but most importantly, increasing the investor trust that all the relevant infrastructure institutions are acting and speaking the same voice. They are speaking in the same language. That shows that there is an underlying important ethos that for us, investor protection, investor empowerment is the common mantra where all we are trying to put this forward together. Just before I conclude, I would like to add that in any kind of sport, the process of umpiring is extremely critical, and that increases the viewership. I think for us, we as an ecosystem are the most important umpires to ensure that more and more investors come into the ecosystem, to ensure that there is wider participation and also it leads to a higher level of investor empowerment, as well as more and more participation in our markets. Thank you so much.
Thanks a lot, Mr. Vora. And now I am inviting Mr. Bala V, who is the MD and CEO of India INX. In last 1.5 years, we have found that the government is giving a lot of importance to this sector. Two ex-secretary corporate affairs. One is made in charge of the GIFT City, other is made in charge of the regulator. And about last week, we found that there was a full-fledged regulator there in GIFT City, because about manager and above they have advertised for about more than 100 posts. So over to you, Mr. Balavi.
Thank you, Mr. Sabharwal. Very good afternoon to all the panelists. Very good afternoon to Shri Bajaj, Additional Secretary Financial Markets, and also the full-time member of the IFSC Authority, and all the panelists and participants who are participating in this program. As Mr. Sabharwal mentioned, actually, IFSC is a very new concept in India. I think the IFSC was created in 2015, where RBI actually issued the regulations. But I think in the last 3-4 years, quite a few developments happened. And so far, we have been talking about the history of Indian capital markets over 200 years, which Ashish nicely summed up, and the kind of investor base which has been growing, primarily fueled by the retail participants. Here now we are talking about the next phase of the Indian markets itself, where we are talking about actually internationalizing the international markets. And that is where we have gone into creating a separate carved-out zone, which is the GIFT IFSC, which is the only IFSC right now, where actually we are looking at a kind of a partial convertibility. And incidentally, last week, the IFSC authority issued the banking regulations, wherein actually qualified resident individuals, that is all individuals from India, are also can participate in the IFSC through the liberalized remittance scheme of RBI. So that is, I think, a very big welcome development for us. That will actually increase more participation here. And more importantly, the theme of this topic here is the knowledge session on various asset classes. So the good thing which we have done over the learnings over the last so many decades, I think SEBI, which actually helped us in getting our exchange kickstarted in 2017, actually did a very wonderful thing of actually allowing us to be a universal exchange and not an exchange in silos. So we actually have all the asset classes, whether it is equity, whether it is equity derivatives, currency derivatives, or interest rate, or commodities, all available on a single platform. So effectively, all participants can actually trade and settle in one single platform with one single margin and one settlement at the end of the day. So that becomes a very, very useful thing. It also helps in terms of scaling up the business and also makes it very, very competitive for the investors to actually participate. Apart from this, I will also like to say that now recently India International Exchange crossed the Rubicon threshold of $10 billion trading on a single day. And we are now consistently trading almost about $7 billion every day in our derivatives platform. And we also have been given permission to list and trade the foreign currency denominated debt and the masala bond. Until date, almost $48.5 billion has been listed on our platform. And recently, the IFSC authority has been created through an act of parliament. And actually, they have been notified to become fully functional from October 1, 2020, after which we have been seeing a lot of new guidelines coming in. And we are now looking at a lot of investment products in the pipeline, which include global depository receipts, which also includes REITs and InvITs, which can be listed. And we are also sure that in 2021, we look forward to a lot more investment products in the pipeline, which will again be of a lot of interest to investors. And as some of my earlier speakers did allude, saying that actually there is a very low interest rate regime available in the world. So I'm sure all these asset classes will find takers, both from international investors and international participants, as well as from the qualified resident individuals going forward. So I'm very excited about the future of the IFSC, and I'm thankful again, and I look forward to more participation and more such events. And we like to actually do a lot more investor roadshows as an exchange to actually promote the culture of investing in the country. Thank you.
Thank you, Mr. Bala. With you, we'll certainly be doing more programs together, the CPI and with you in days to come. Mr. Reddy is not yet able to join. So I am now requesting Mr. Rishi Nathani, the Chief Business Officer of MCX, to just say a few words for 3 minutes. Mr. Rishi Nathani, please.
Thank you, Sabarwalji, and thank you, CPI, for inviting me here today. In the event of World Investor Week, the topic is very apt as investing in various asset classes. And since I am from Commodities Exchange, I'll briefly talk about commodities. So when we talk about an investor, actually every human being is invested in commodities, because what you wear, what you eat, where you're sitting, everything is commodities. So actually everyone is invested in commodities. The only difference is we need to make them realize to how to financialize it. And we've seen that whenever any market gets financialized, participation in that market increases, which you saw in the late 90s in equities when DMAT came in. And in commodities, the earlier question was that what if I get delivery? Will a truckload of goods land up at my doorstep? But no, we have a robust warehousing system. We have dematerialization of the warehouse receipts. So we have electronic negotiable warehouse receipts. And because of that, the investor has the best of both worlds. They can take physical delivery or give physical delivery, or they can get dematerialized ENWRs and trade that. So in both ways, investors can access the commodity markets in a very easy manner. Another advantage of investing in commodities is that over longer holding periods, commodities have an inverse correlation to equities and bonds. So it acts as a very good portfolio diversification and hedge, and reduces the risk and the standard deviation of the portfolio. Also, in periods of inflation, commodities do pretty well, because actually rising commodity prices is part of inflation. So in that sense, people would do very well to also look at commodities as the part of the overall portfolio. So while you're investing in equities, you're investing in bonds or real estate, insurance, you also invest in commodities. Another advantage of commodities, especially internationally linked commodities, is it also acts as a hedge against currency depreciation. Because, for example, if the price of gold internationally remains the same, but if the rupee falls against the dollar, then your gold price in India would go up. So for people wanting to also have a currency hedge to their investments, commodities, internationally referenced commodities, would be a great way of investing. And as people have been saying, commodities globally are much larger than what we are seeing in this country. And with all the new products and participants SEBI has brought in, all the institutional participants coming in, I'm sure these markets will grow at a very fast clip going forward. Many people ask, how much exposure should I have to gold or to commodities? Well, it depends on your risk profile and time horizon. Also, if you have the capability to spend time and research, do your own research and understanding, then only access commodity markets or other markets. If not, leave it to experts, fund managers, portfolio managers who will do it on your behalf. To end, just one investor message I would like to say is, investigate, then invest, not vice versa. Thank you so much.
Thank you a lot, Mr. Nathani. And before I call the Executive Director of SEBI, Mr. Sundaresan, I will like to mention that the SEBI, along with all MIIs, that is NSE, BSE, NSDL, CDSL, Metropolitan Stock Exchange, has in the early week has come out with a book on securities market. For the investors, we will be e-book of that will be passing on to all the participants today and to all even 1000 members of CPI by Monday. This book was actually prepared under the guidance of the Chief General Manager SEBI, Mr. Krishnanand Raghavan, who is there with us, and his team, and of course, Bombay Stock Exchange, Mr. Bulsara, Mr. Bharat Dave, and Mr. Raghavan's team, Mr. Panigrahi, and others, and Rashmi Sharma and Mr. Arun Panigrahi helped him for preparing this book. It is a very informative book which will be passing over to all of you. And now I request Mr. Sundaresan, to whom all of us knows, he is one of the senior most officers with the SEBI in terms of the number of years of service, though he is executive director and the in charge of the commodities and surveillance and close to the hearts of many of the office bearers of exchanges and the market participant. Over to you, Mr. V. Sundaresan.
Good afternoon to all the dignitaries and participants. It's a great privilege that I have been given this opportunity to share the, dais with many people who are the stalwarts in the securities market industries. And as pointed out by one of the speakers, that it's a very rare occasion where all the heads of the institutions come together and participate in one seminar and give their thoughts. Since my earlier speakers have already spoken about a lot of statistics and other things, I would like to travel to a different path, which I usually do in my sessions. As we all know, a few days back, we lost one of the legends of football, that is Maradona. And, another football giant who is there now is Messi. So I would like to take a small cue from that name and then send some message to the investors. As the word says Messi, I would like to remove yum, and instead of that, I would like to replace that with yal. So the acronym forms as LESI. So what I mean is that, as pointed out by the earlier speakers, if India has to grow, and despite this pandemic situation, has to grow and achieve a $5 trillion economy if in 2025 or little bit later because of the existing situation, our youth has to play a significant role. So there is a need for the youth first to learn properly whatever skills they have trying to learn, whether it is in the form of a proper education, whether it is in the form of any other skill set which they want to learn to become an entrepreneur or seek an employment. So the first basic important aspect is to learn properly and get a proper qualification or a skill set which will enable them to move to the next stage, which is called E, that is earning capacity. So they have to be productive. They have to earn for first. After using their knowledge they have gained by proper learning, they have to earn. Now, once they start earning, the first thing they have to do is, as the finance minister also has been trying to increase the consumption to perk up the demand, they have to spend the money for the basic needs of themselves as well as for their family members and other purposes. So the next thing is, after earning, the next letter comes is yes, which talks about a part of the earning should be used for save. Confused between saving and investment. So the first thing is that they have to save. as rightly pointed out by the earlier speakers, coming to the securities market, I will not call it as a saving. I will call it as the next I, that is investment. So LESSI, that is one has to learn, then earn, then spend, then save, and then come to the securities market with a clear understanding that it is an investment, it is a long term, it is not a short term. There are many terminologies used in the market nowadays that buy today and sell tomorrow. So if you put the letters together, it is BS, buy today, BTST. So if you keep on telling that word BTST, then it will become bust. So what will happen is that if you start adopting this type of mechanisms or practices, you will not be able to sustain in the market, and there will not be a possible growth for you to get the proper return on the investment. So the very important thing for the investor to know is that it is an investment, it is a long-term strategy, and
Mr. Sundaresan, we are not able to get your voice.
There seems to be a connectivity issue.
Sundaresan ji,
Yeah.
have lost the connectivity.
Sir, unmute, please. Yeah.
Sundaresan
is
ji.
it audible now?
Yeah, yes, please continue.
Okay. Yes. So what I was trying to say is the characteristics of the products available in commodities derivatives market are slightly different from the other products available in the equity market. So it is very important for the investor who is entering the commodities derivatives segment as to understand the various risks associated with these products, the salient features of these products, and then decide to choose the particular product depending upon the risk profile of that investor. So here comes the importance of the MIIs as well as the these associations, the regulator, and all those people. And it is important that we all, like this seminar, we come together more often and then imbibe the discipline in the minds of the investors so that they understand the risk associated with the products they want to choose depending upon their risk profile, and accordingly we guide them to make the proper investment. Because as earlier pointed out by the speakers, the trust and confidence in the intermediaries the investor is interested that do not exist, then it will be a problem for the market to grow. Therefore, all the associations and MIIs, as Mr. Nagesh pointed out, it's a very good idea to come and do a continuous, way of, passing on the information to the investors through a common site or a particular period of time, so that, the investor is given the requisite knowledge at a periodical level, and it will enable them to get updated from time to time so that they will be able to take informed decision on whatever investment they decide to do. So with these remarks, I would like to thank CPI and especially Mr. Sabarwal for regularly following up and ensuring that I am able to participate in this seminar, and it is my privilege to be here, and thank you once again to all of you.
Thanks a lot. I am aware of that there is a bereavement close in your family today, and you were busy, and still you gave us the time. We are special thanks to you for that. And now I am calling upon to the individual for whom we were all waiting for, Mr. Anand Mohan Bajaj, who represents the financial market with Government of India. He being from Indian Audit and Account Services, but today is the additional secretary financial markets and a part of most of the financial decisions of the PMO, the Finance Ministry, and the Government of India. Over to you, Mr. A.M. Bajaj. Actually, I am special thanks to him that initially he told us that he will be there with us for 10 to 15 minutes, but he is right here with us from 11:35. A special thanks to him. Over to you, Mr. Anand Mohan Bajaj.
Namaskar, everybody. Am I audible?
Yes, sir, you are audible.
Yes, sir.
We are able to see that you are sitting in the office itself.
Yes, yes. We are all working. So I've been listening very good speeches by the CEO of India's leading stock exchanges, also other persons from the CPAI, Mr. Wadhwa and Mr. Agarwal. You know, it is actually very important and very thoughtful of all of you, including ISCO and SEBI, to organize a week-long event exclusively dedicated for investor protection. Investors, all of you have mentioned, in fact, you all know very well the importance of investors protection, investors awareness, investors education. From the government perspective, you know, we are focused on the growth and development of India's economy. And there are a lot of components when we talk about the growth and development of economy. We need big money for infrastructure development. And we need a credible mechanism for financial intermediation. We have the banking system. Recent years, the NBFCs have done credible job in the financial intermediation, getting the savings channeled, savings of a small man from a small village in a corner of India, to the productive purpose for the development of economy. And in this respect, the capital markets also play a very important role. The equity market, the bond market, including the government securities and the corporate bond, they all play a very important role. And this important role can be increased exponentially if we are able to provide more and more value in the hands of investors. And that would mean that they are able to get their trust cemented. Yes, that this is one area we can go without any issue. Of course, they need to be aware. There cannot be an investment in securities market without being aware and without being educated of the risks of investment. Unlike a bank fixed deposit, or unlike investment in government securities, for example. And therefore, we are all aware that all of you are doing your bit. SEBI, as the market regulator, has an elaborate system for the investor protection and education. We get hundreds of customers' grievances every day in the finance ministry. And all of it is, or most of it is transferred to the scores portal of SEBI. And in general, we get the feedback that their grievances are settled in a time-bound manner to their satisfaction. And that is a very important thing. There is a dedicated toll-free line, helpline which SEBI has. We need an investor which is there in a small village, let's say, in the country, to know whatever he needs to know. And that kind of infrastructure, that kind of facility we need to create. This is part of the overall campaign of the government for financial literacy and financial education. You know, you all have seen in recent times the share of retail investment has been increasing. More and more people are now coming to the stock market. Now that's a very, very welcome step, welcome sign, welcome development. But if more and more people are joining, we need to also be alert and vigilant that their trust and faith remain. They remain in the market, and therefore, not only the stock exchanges have to work in this area, they are already doing a lot of things, but the investment advisors, the brokers, you all have a very important role to play. We need loads of information in various forms available to the investors, whether it is in the mobile app or on website. And in this, the associations, I think AMFI and all are doing tremendously important job in telling investor what is good, what is not good, where to invest, where not to invest. You know, for nation building, we need big corporates. We need big companies. And number of companies, our companies in international ranking, whether you call it the top 500 or top 2000, are increasing. That's a good sign. Because corporates are a key engine to power nation building. But that would also mean that they are able to raise finances easily. And for that, you need to have ease of access, not only for the corporates, but also for the investors with a trust and confidence. And that leads to the next step, that you must have ease of transaction. And with the development of financial technologies on the corporate, on the capital markets, the cost of doing business, the cost of transaction is coming down, which is a good sign. And all this lead to the value creation for those who are players in the market, whether they are brokers, whether they are investors, or any other, in any other form you are associated in the market. We need to have a system where there should not be, or there should be no scope for asymmetric information, the creditworthiness of a company, the performance of a company in various user-friendly way are available and disseminated in a regular fashion. We have done this 1 week exercise, 1 week campaign, which is a very good step. But we need a regular sort of arrangement so that all kinds of information in brochures, in booklet. I think I heard Mr. Sabharwal saying that they are releasing a booklet, which is a very good thing, should be available. I think the easier way nowadays in this fintech era is to tap the facility of mobile. And there could be dedicated mobile apps loaded with all kinds of information in all possible ways. If an investor wants in a time series manner some information, it should be available through some authoritative source. The basic financial concepts could be made available there. The basic principles of investment could be made available there. Various products, you all understand very well every product, but a layman may not understand. So the various product structure, the fees involved, how much will go to the investment advisor, how much will go to the mutual fund managers, how much would be the cost of transaction, the potential risk, what is the process of buying and trading and selling on the market, how they should be able to get their securities there, what are the rights of an investor and what are the duties of an investor. If there's a problem, where should the investor contact or where should he file his complaint? All these must be informed, must be told to them in a very, very easy manner. I think all of you are aware. In fact, I just thought I must give you from the policymaker's perspective how important it is to win and retain and maintain the trust and confidence of a common man, of a common investor. That will help in the role of capital markets, more for the market, the financial intermediation and eventual growth of economy. Thank you very much for calling me.
Thanks a lot, Mr. Bajaj. You have given us more than 100 minutes. I request you to be there for 2-3 minutes more. And now I request Mr. Vivek Agarwal, our National Executive Committee member, the past chairman, and the chairman of our drafting committees of various proposals, Mr. Vivek Agarwal, to give concluding remarks and formal vote of thanks. Mr. Vivek Agarwal from East India, Calcutta.
This Saturday morning, we have on the same stage the cream de la cream of India's financial market infrastructure and regulatory leadership. Shri Anandji, Mr. Sundaresan, Ashishji, Mr. Limai, Mr. Rao, Mr. Vohra, and all other dignitaries. You and your teams have been working extremely hard to cope with the breathtaking pace of market reforms SEBI has been relentlessly pursuing, and you have been spending sleepless nights to ensure our markets are safe. We salute you and thank you, sir. We are proud of you. On this Saturday morning, in this celebration, take a breather from your hectic routine, have a glass of water, and pat yourself on the back. You have done a wonderful job, sir. On this occasion, let me remind you, sir, that whilst the rest of India is celebrating India's rise to 63 in the ease of doing business rankings, This ranking is a weighted average of 10 parameters, and on the parameter of protecting investors, India has reached number 7 ahead of many advanced countries. And for this, we have to thank you, sir. On the two objectives mentioned in the preamble to the SEBI Act, namely protecting investors and regulating the securities market, you have already done a wonderful job, sir. And my guess is we are above 95% in the agenda of what we can do in the foreseeable future. On the third objective of promoting the development of the securities market, whilst the government has done excellent work in introducing new products, however, volumes on the Indian exchanges still have some way to go before they are comparable to volumes on the American and the Chinese exchanges. Whilst other industries are looking at government giving them production-linked incentives to grow, next week our association will submit our pre-budget proposal proposing a revenue surplus proposal which can grow our markets and also keep government revenues protected. But for today, sir, let us join the celebration and thank you, all of you, sir, in gracing the occasion and being part of us and as co-stakeholders in the market and celebrating this occasion. Thank you very much, sir.
Thanks a lot. We will be straight away starting our next session, and we have the three best persons of the country, Mr. Navneet Manot, Mr. Nilesh Shah, and Mr. Ajay Bagga. They doesn't require any introduction. Actually, Mr. Nilesh Shah was also very busy. He has to leave by about 1:25. So I am straight away starting the next session and request all participants to be a part of that and to moderate that session. I am requesting Mr. Ajay Baggaji to please take it over forward, though initially it was decided that I will be doing it, but then my senior colleague suggested that Mr. Bagga, when he is there, he should be allowed to take the session forward. And I request Mr. Ajay Bagga, Mr. Navneet Manot, and Mr. Nilesh Shah to take this session forward. Over to you, Mr. Ajay Bagga. Please give chance to Mr. Nilesh Shah first, as he has to leave early. And this session, in the end, concluding remarks and vote of thanks will be given by our All India Vice President, Mr. Kamlesh Shah of Share India. Over to you.
Sabarwalji, our journal is to be veiled. If Mr. Anand Bajaj is there, I'll request Rishant to please have a cover of our journal, digital cover also, for 1 second. Yeah.
After Vivek Sahab has left, I would have told him, but now I am not able to see him.
Okay, thank you. I'll take it as it. Over to you, Mr. Bagga.
Thank you. Thank you, Narendraji. Thank you, Mr. Sabharwal, all the dignitaries, Vikram, Ashishji, old friends, and a lot of new friends also, like Sunil Bansalji. Delighted to be here with all of you. Ashokji, thank you, Vivekji. Nilesh bhai, we meet again, and once more you have a flight to catch, as always, so we have to get the most out of your 20 minutes that we are given. Navneet, I seem to be always apologizing to you, but it is doing good for you. Congratulations, heartiest congratulations on the new position. We are all, your old friends are really, really delighted at this great new assignment for you. Heartiest congratulations.
Mr. Navneet Manot is not forgetting his old loyalties.
Yes, absolutely.
SBI Mutual Fund is prominently displayed.
Bilkul.
Thank you so much.
Thanks. Nilesh bhai, starting with you. 2000, all of us are in a rush to say goodbye to 2000. Now, crystal ball gazing, this is a week for investors that we are celebrating. What do you foresee? Some crystal ball gazing from you. Where are we going in 2021? And please give us an assurance that it will be better than 2020. We want it from your, from your lips, so that it is sealed, signed, and delivered.
Undoubtedly, Ajay bhai, just pardon the background noise. It's the voice of Azan coming over. 2021 is likely to be better than 2020 for sure. As now, we have medical solution around the corner for COVID-19 problem. Second, foreign investors have gone berserk on India. In the month of November, they have put in 60,000 crore. This is the highest ever flow in rupee terms as well as dollar terms in Indian market. Over last 12 months, across all emerging market, FPIs have redeemed money. But in India, they have pumped in $13 billion. The government and RBI is betting like Rohit Sharma and Shikhar Dhawan. They have pumped liquidity, cut interest rates, drafted rules, regulations to facilitate business. Labor laws are relaxed. Agriculture sector reforms are being undertaken. And God has been kind this time with good monsoon. So all ingredients are in place for a better 2021 over 2020.
बस आप ये संभाल के रखना सर. Now over to you for that. Please ensure. No unknowns to come. बहुत झेल लिया 2020 में. So what are the big learnings, Nilesh bhai? You've had decades and decades of experience, but what are the key one or two things that you have learned from 2020?
So one, Ajay bhai, is never to let go optimism. I mean, as a fund manager now, we have been geared to be optimist. But despite that, which is inbuilt into our DNA, I will still reiterate that worst of the time you have to be optimist. Glass is either half full or half empty. In the worst migratory crisis, while there were people focusing on the troubles, I looked at the solutions. And I'm sure, Ajay bhai, you also would have been involved in many activities where people came across India to support people who were in trouble. I think if in a country of 1.36 million people, we ensured that no one died of hunger during this crisis, it's an amazing achievement. And this is not to say that there were huge troubles for lots of people, but there were also people who were coming out to support. From market point of view, that optimism should result into discipline. I'm sure Ajay bhai and Navneet will also agree that today maximum calls which we receive are from people who are saying, Nilesh bhai, correction kab aayega so that I can invest. And I have been very politely telling them, sir, whenever you make investment, do let me know because correction is round the corner after your investment. So discipline always pays, optimism always plays. Instead of fear and greed, be disciplined and be optimist. That will solve a lot of your problems.
This is so true. And, I have seen this in life. Pessimists sound very intelligent, but the optimists make the money. घर से निकल के काम तो करना है. I remember, one seminar I had attended of Nilesh bhai years back, and he said, 93 say, 95 say, if you had invested in the funds, especially when he was working in Templeton and our old pioneer funds he was running, and he said, anyone who had money, that 10 rupee fund had become 1,000 rupees prima. And he said, I find very rarely anybody who has actually stayed invested. And that is what research is showing, that if the markets are giving 13%, the average equity mutual fund portfolio of investors is at 4.5%, which is because we have this FOMO or we have the JOMO. Either we are feared or we are joyful in missing out, but we miss the bus continuously. If we just stayed invested, that would be a very big lesson. So optimism, the natural radiance of Nilesh bhai and his natural optimism, that is something I've learned from my friendship with him of nearly 3 decades, always smiling. Now, Nilesh bhai, coming to equities, I have very limited time with you, so I have to pin you down fast. Equities, will it be value versus growth? Will it be value coming back versus momentum? Large cap or mid cap, small cap? Sector wise, where do you see any details? Yes, we will do our SIPs disciplinedly, but thoda sa, getting access to you, we want to see behind the curtain also. What is your thinking?
So Ajay bhai, this time flows and fundamentals are coming together. ये सोने पे सुहागा है. FPI flows I talked about. Retail flows have been extremely strong. All those distributors, brokers who are on this show, they will vouch for it that this time retail has been a buyer and HNI has been a seller. Eventually, HNI's cash also will have to come to the market. And September quarterly results were way beyond expectation. We were expecting degrowth in profitability. Actual profit growth for Nifty 50 came at 17% higher year on year. This came in a quarter where sales were down 7% and profits were up 17%, showcasing huge margin expansion. This was one of the worst business quarter, and profitability is the highest ever in the history of India. Suddenly, the valuation of market has come down because profitability has improved. Now, the crucial question for market is, can this profitability sustain? Can Nifty 50 company deliver 1,07,000 crore of profit every quarter like they did in September quarter? In my opinion, it is entirely possible, subject to second wave of infection. What's happening in Delhi, if it starts happening in rest of India, then certainly these numbers will get deferred. But subject to that, today flows and fundamentals are coming together. From a large cap, mid cap, small cap, large caps are at all-time high in terms of Nifty Sensex. The mid cap index is down about 7% from Jan 18 high, and small cap is down 29%. Valuation wise, small cap does provide opportunity compared to large cap, but one will have to pick up good companies. The third thing is about, will growth do well, momentum do well, value will do well? My feeling is that instead of growth, value or momentum, we'll have to look at companies which are running their business rightly. So if you are excessively leveraged, chances of not delivering return are far higher if you are unleveraged or moderately leveraged. So look at companies whose capital structure is appropriate, not heavily indebted. The second will be companies which are grabbing market share from other players. We are living in a world where big is becoming bigger and small is getting marginalized. So you'll have to invest with companies which are gaining market share. Whether they are gaining from their large competitor, small competitor, unorganized player, doesn't matter. As long as he is gaining market share, he will do well. The third, Ajay bhai, in today's world is adaptiveness. The biggest of the companies will fail by a small startup in a garage if big companies behave like dinosaur. We all have to learn that our tail is on fire and keep on working in that fashion. Companies which will leverage digital ecosystem, companies which will connect by removing intermediation, they will do very well in the days to come. So instead of focusing on growth, value, momentum, focus on capital structure of company, focus on ability to gain market share and adaptiveness to weather the crisis or take advantage of opportunity. These three characteristics will help you build a portfolio which will outperform the market.
What are your instructions to your fund managers for 2021?
Keep on doing work on the ground. See, Ajay bhai, today When I was fund manager, I had the luxury of not watching a television 24/7. I had no social media presence. So I was able to sit in my corner and think and do what I thought was appropriate. Today, there is so much of noise that a fund manager or an analyst will get burdened by the noise and he will miss the fact. You will end up missing the woods for the jungle. So it is extremely critical that you ignore noise and focus right onto what's happening on the ground. Now, if you are going to rely on company, chances are that you'll have to really read between the lines and interpret what that guy is actually saying rather than what he's saying. Now, in today's world, due to COVID-19, our movement has been restricted. How do you get information from the ground without actually physically traveling? So my request to my fund managers is very simple. Please focus on getting information, remove the noise, and try to get it on ground sitting at your home despite physical limitations.
Very nice. What a nice encapsulation. Sector-wise, Nilesh bhai, I'm not asking you companies, but broadly sectors, any preferred sectors? I know you're talking bottom-up stock picking, but on a broad brush, which are the sectors you see outperforming next year? Or will it be everything?
So I think it will be a rising tide, but within that some boats will rise more. We remain bullish on building materials sector, which covers right from cement to pipes to tiles to paints to furniture and fittings. Now, many of these players are in unorganized player sector, but many of them are in listed segment. We think real estate is making a turnaround, especially on residential side. The government's spending on real estate and infrastructure also is creating demand. And this is best captured in the building materials sector across the entire value chain, from tiles, pipes, fittings, furniture and fixture to cement. The second sector where we remain bullish is where public sector is in majority market share and private sectors are in minority market share. Due to various restrictions imposed on public sector, they will continue to lose market share and private sectors will continue to grab market share. Of course, there are few public sector exceptions like Navneet's current organization, SBI Mutual Fund, they are the largest. But this is by and large applicable to other sectors. We think by gaining market share, private sector firms will do better value addition to their shareholders. Today in financial services space, we see private sector banks gaining market share over public sector banks. In general insurance, we see private insurance players gaining market share over public insurance. So these are some of the sectors where we think there is long-term opportunity. One big sector where valuations have run up a lot, but growth potential is huge, is chemicals and contract manufacturing. The supply chain dislocation from China to rest of the world is coming to India, especially in chemical and contract manufacturing space. In anticipation of that, valuations have run up a lot, but still there could be opportunities in that sector.
And IT pharma, the golden boys of this year, how do you see them in 2021?
My view on IT and pharma on a top-down basis is coming from rupee side, while in reality there's no connection between rupee movement and IT and pharma sector's profitability. Psychologically, people do link in a appreciating rupee mode, slightly derating of pharma and IT shares. My gut is that over next 3-6 months, we may see appreciating rupee rather than depreciating rupee. Reserves are at all-time high. flows are strong. Rupee has depreciated against all other global currencies, and hence there is room for rupee to appreciate a bit. This will cool down imported inflation, and this will obviate the need for RBI to keep on accumulating FX reserves and adding domestic liquidity to some extent. So very, very near-term view, purely from a top-down rupee point of view, IT pharma may be market performer or maybe little market underperformer.
Okay. And Nilesh bhai, where are you seeing interest rates? And I would like you to give some thought to the savers, the older people, the retired people who are feeling this hit, where banks have, given the 7 lakh crores of daily liquidity going to RBI. Banks have really reduced the fixed deposits. So people don't have a low risk income alternative. What some suggestions on that front?
So Ajay bhai, everything in excess is bad and everything in equilibrium is fine. Whatever supports you in excess will also kill you. So for example, if you take certain medicine, it helps you control your blood pressure, diabetes, or cholesterol. But if you take higher lot of it, obviously it's going to hurt you. So we should be in equilibrium rather than on extreme. And same thing applies on interest rates. Interest rates should be in an equilibrium manner where it supports savers as well as it supports borrowers. If we go more towards savers, borrowers will get hit, and that elderly gentleman's son or daughter will be without job and they will be living only on interest income. On the other hand, if we go towards borrower's side, savers will get impacted. So we need to be in equilibrium, and I think RBI is doing a great job on an equilibrium point of view. The short-term rates have come down dramatically, but the longer-term rates are still on the higher side. There are segments within society which borrows at much higher rate. My feeling is that we have to really adopt market mechanism. Today, a small and medium enterprises will be borrowing at 14-15%. Any saver will be happy to lend. But एक बार पैसा lend कर दिया तो वापस कैसे आएगा हमें पता नहीं है. Now, can we not create rule of law where when you lend money, it does return back, and there will be higher risk at higher rate, but then those risks can be managed. So our solution lies not on providing concessional interest rates to savers. Our solution lies in developing market, which will allow savers and borrowers to assemble on a risk neutrality basis.
And do we have 2 more minutes, Nilesh bhai?
Sorry, Ajay bhai, I have to leave.
Okay, one last question.
Yes.
One last question on something you have worked a lot on. China just raised money in a sovereign bond at negative yields. Do you think there will be a time when India will be able to do that? So the world pays to us to actually give us money.
So as of today, it looks little bit difficult. And my feeling is that Ajay bhai, everyone is saying that India should open up for foreign direct investment, foreign portfolio investment. But Ajay bhai, if I get $100 billion more, today it's not going to come to India at a negative interest rate. It's going to come at 1%, 2%, 3% dollar interest rate. I will get that $100 billion, my reserves will go from 560 to 660. And I will deploy that money back in US Treasury at 0.5%. So effectively, I will be earning a negative carry of anywhere between 0.5% to 2.5%. Now, why not we use domestic savings, which is lying in our tijori? In last 21 years, we have imported $500 billion of gold through official channels, gold smuggling, and jewelry which comes back with travelers passing through green channel, especially when they return from Middle East countries. Now, this money is lying in tijori most of the time. Banks and NBFCs give gold financing at a much cheaper rate. And yet, unorganized sector financing, Sarafi lending on gold, is 5 times bigger than banks and NBFC financing. आप शराब से लोन अगेंस्ट गोल्ड लेते हैं, आपको गोल्ड का सोर्स डिस्क्लोज करना जरूरी नहीं है। बैंक्स एनबीएफसीज में आप गोल्ड के सामने लोन लेते हैं, इनकम टैक्स वाले को पता चल जाएगा। Now this shows that there is tremendous amount of Indian savings locked in तिजोरी। उसको कैसे हम बाहर निकालें? If we take that out, there is no need for us to go to outside world for borrowing. We will need foreign investments from technology point of view, but not from a money point of view. If we mobilize our own savings, if we defreeze our own savings, which is unlocked in our tijori.
Ajay, I will like to interrupt for 30 seconds. Lot of thanks to you, Mr. Nilesh. We were knowing that you had a program up to 1 o'clock and then you had a program right at 1:30. I even remember that last fortnight when I sent you Happy New Year message, with such a kind and sweet reply came from you. And in our last 4 months, you had participated in the 4 programs. So CPI will keep on looking for more programs and the encouraging words from you as you did it on the New Year day to me. Thanks a lot, Mr. Nilesh Shah, for joining and giving us 35 to 40 minutes. Over to you, Mr. Ajay.
Thank you, Nilesh
Thanks
bhai.
a lot, Nilesh bhai, and wish you a very happy new year.
Thank you.
I think it was quite good. I mean, we all have become wiser.
Thank you.
Thank you.
Ashok ji. Nice to see Naveen ji also joining.
Yeah, Naveen ji. Actually, Ajay ji was in so much hurry. I wanted Naveen ji to give this vote of thanks to Nilesh, but he was in so much hurry, so I had to interrupt. Naveen ji will be, you can take him after Mr. Manoj, and you can take one question from Naveen also after Mr. Manoj. Now, please, a very senior man is with us, and we had to utilize this 20-25 minutes in next this thing. So, over to you, Mr. Ajay.
Thank you. Thank you, Sabarwal sir. Navneet ji, once more, my apologies to make you wait. It would have been a great Jugalbandi if we had both of you together. But once more, Nilesh bhai was in a rush. So my apologies to start late with you.
No problem. I mean, I and Nilesh bhai, so we have been a healthy competitor as fund manager for last 3 decades. But we are more than healthy collaborator when it comes to investor education, investor awareness, deepening our markets. Or I mean, my sincere compliments to CPAI for doing this during the Investor Education Week, getting all the people, relevant people from Ministry of Finance to SEBI to who provide the market infrastructure to all the market intermediaries, and furthering the cause of investor education, investor awareness. So sincere compliments.
Thank you. Thank you. So now, as you transition from being the Chief Investment Officer to the CEO, what are the thoughts, Navneet? No one will ask you that in public, but let's all benefit from those thoughts. How are you planning your transition like the Biden transition? The first 100 days of Navneet Munot, what will we see?
No, it's the same thing. So we are all driven by a deep sense of purpose that in our country, if we have to become a $5 trillion economy, we need to penetrate a lot more. We have to channelize savings into investments. We will have a humongous investment needs. On the other side, we have to boost savings, channelize those savings into the capital market, make the risk capital available to our entrepreneurs, and so that we also become Atmanirbhar in our investments. We don't remain fully dependent or to a large extent dependent on foreign savings only. And also that how do we ensure that large number of our people or our population benefits from the growth potential or the growth story that India will generate. And I think that's the mission with which wherever we work, I mean, I or Nilesh bhai and all our colleagues in the industry get driven by that purpose. So wherever we are, we continue to further that cause. So the first 100 days or last whatever 100 days or 100 months have been driven towards that, and will continue to be driven by that sense of purpose.
Okay. We all wish you all success in this great new assignment. Now, looking forward to 2021, we are going, if 2020 you could have said in a word, resilience, and 2021 is renormalization. And there were beneficiaries in 2020. Do you see a normalcy coming whereby, say, I'll give an example to illustrate, and then I would like some Indian insights from you. uh, Zoom has eaten the hotel revenues. So business travelers would use airlines, would cab services, would eat out, and would use hotels, which has gone to Zoom. And you saw Zoom really benefiting. Zoom as, work from home kind of a service. Now, as things normalize, we saw Zoom falling in October, and then it kind of became very plateaued. What do you see in India? Who are the beneficiaries this year? And then next year, how are you positioning your portfolios to catch the winners of next year? And who are these winners? Without taking any names, just some sectoral insights from you.
So I think because you mentioned about the Zoom, which has seen its market cap going from, if I remember correctly, from $20 billion at the beginning of the year to $120+ billion last when I saw a few days back. And it has gone up 6x in a year because this turned out to be a big opportunity for a platform like Zoom, which is the case with a lot of other businesses and businesses that have built resilience. I mean, you use that word, and I think this is the word which is very important for any business leader. How do you build resilience in your business? Over the last 20 years, we have seen that one-off events, or let's say in our language, we call 6 Sigma or 5 Sigma event, which should happen once in a century. They happen like every second or third year, whether it was the dot-com bust or 9/11 or global financial crisis or taper tantrum or Euro crisis in 2012-13. I mean, you can go on, including the once in a century health crisis and the economic crisis that we saw this year. If they keep happening, then how do you really build resilience in your business? How do you fortify your balance sheet? How do you ensure that your liquidity position, capital position is adequate to not only to survive any crisis, but to come out stronger? I think that is very critical. Look for those businesses. The entire risk management focus has to be very different of the business leaders. And that's what you look for in a company while investing or whatever business that you are running. It is not only about scenario planning on Excel sheet, because you would have done 62 scenarios, but the COVID turned out to be 63rd. You didn't realize that, or you couldn't foresee that your entire workforce would be sitting at home for several months and you have to do business very differently. How do you really build feedback loops? I mean, and deal with unknown risk, which is very difficult to forecast. How do you deal with resources, particularly the human resources in this today's new world? How do you take the holistic well-being of your employees, motivate them, work with them very differently? Data privacy and some of these things become very different. And I say that every CEO has to be the chief health officer and the chief education officer, because new skill sets will be required in your human resources. How do you focus on R&D and innovation a lot more? The world is so different, and Zoom is a great example you did. Logically, it should have been the time for somebody like Skype or other guys who've been around for so long. But you have to have that kind of R&D and innovation and agility and nimbleness where you can take advantage of the opportunities that are coming. Last but not the least is relationship. Your relationship with all your stakeholders, be it the vendors, be it your customers, your whatever suppliers, your employees, your shareholders, your lenders, your local community, I mean the government and policymakers. How do you work with all of them? And don't try to shortchange or don't look at a shortcut during these times, but build a structured long-term relationship. I think that would differentiate the structural winners from the losers in this. We are going to see a creative destruction of an unprecedented order. We have seen that in like 91 reforms when that happened, and you know how new set of players came into the market versus the great companies which were there in 80s and early 90s. And I think something similar is likely to happen. Instead of sectors, so I think few months back, Ajay, we have, discussed on a couple of similar platforms. So I said that the economies are going to be a lot more virtual. So IT should be a beneficiary, healthcare should be a beneficiary given the focus on healthcare. Rural should do better than the urban. Data is the new oil. Of course, they would be a beneficiary. We discussed about the benefits from supply chain shifting to India, whether it's chemicals, electronics. But one interesting thing about the market is that cycles are getting shorter and shorter. And because of that, some of these things that you think will pan out over several years, actually just happen over, let's say, in few quarters or even in few months. And a lot of these things get discounted very, very early. So I think investors also need to have that nimbleness and agility, because several of these themes that I can talk about even in next year may get discounted very, very early. So it's better to focus on great management who would ensure that any kind of crisis like this year, they will survive. But at the same time, they will keep working hard. That structural opportunities are so huge in India that they will keep benefiting for a long time and keep giving the compounding benefit. Long answer, because I had a strong view that it's not a time for a big top-down sector call, but look for the right kind of winners in every sector, because structural opportunities across all sectors in India.
Okay. Then, tell me about something that really confuses a lot of investors. Like, if you see the US market returns, it's the FANGs really. And now with Tesla also coming on, 45% of the S&P 500 will be these 6-7 companies. And, they are making most of the returns. Same thing in India, we had the Hritik stocks. In fact, a lot of friends will call me, यार stock market भाग रहा है, index भाग रहा है, मेरा portfolio नहीं चलता है, या मेरा mutual fund नहीं चलता है. So how do you explain that? You are very right कि bottom up stock picking will work out, but people are putting money in passive. So the ETFs are seeing the maximum flows where people are not trying to pick the stocks, even though the stock picking alpha creation is the massive a differentiator, if you ask me. So these two things, Navneet, what are your thoughts on?
Sure. So history doesn't repeat, but it rhymes. अगर ये साल का bull market देखें, market ऊपर है करीब कितना नीचे से 57-58% ऊपर है, right? Ajay, you would have the number on your fingertip exact. So I mean, there are few striking parallels between the rally, if you remember, in 99-2000, जब हमने वो 3000 से 6000 Sensex देखा in a very short period of time. And few stocks were doing well. Of course, the new economy, IT, TMT in those days, and few stocks in consumer and few in pharma. And the rest of the market, you had your, I mean, a lot of people were saying that my portfolio is seeing 52-week low and I see the market at 52-week high, and stocks are like doubling every few days. So there are few striking parallels. For a rally of that sort, you need three things. And you can relate to the market this year. The first thing you need is a massive negative shock, which was 98, Russian crisis, Asian crisis, blow up of LTCM, etc. And of course, in India, we had the Pokhran blast and the sanctions and all that. Then second you need is a massive positive shock from policymakers, which came this year again from central banks as well as the fiscal stimulus. They completely shocked the market with what they have done. And the third thing for a rally of that sort you need is a new story. Some kind of like what is called a displacement, or for example, I mean, that time it was a .com, the eyeballs or some of that sort. This time again, you have this, like you mentioned about the Tesla, that this is a new economy, this is a new world, and the large will become larger. And there are a lot of other factors behind it, whether it's the ETF, the algo money, the machine trading, the Robinhood effect, so on and so forth, which again, you can relate to if you remember the E-Trade and Charles Schwab and our own 5paisa.com, etc. So there are striking parallels and we are seeing that. I think what we are going to see in next few years is some parallels between what we saw in 2007, which was market.
We lost you there.
Say that the global, because it mentioned about the Tesla.
Last 30 seconds, Navneet, your Wi-Fi has got stuck. If you can just reboot.
By the time Navneet ji comes back, we'll.
He's back. He's back. Yeah.
Oh, sorry, I think.
Yeah. After Tesla, yeah.
Problem of technology.
No, all of us are using Wi-Fi, and also downloading films and seeing OTT.
By the time,
Sorry, I didn't get.
Yeah. Sorry, we missed you for the last 35-40 seconds, Navneet ji.
Okay. So I was talking about that last printed so much of money, they could not get the inflation back or could not get the growth back. My sense is that there is going to be massive fiscal stimulus for next several years under the Biden administration. A lot of other countries in the world will follow that, which will lead to a higher income growth in large number of in the hands of large number of people, and some inflation will come back, which will be good for lots of sectors and lots of stocks. A lot of polarization that we have seen in last 10 years is likely to reverse. DM versus EM, value versus growth, defensive versus cyclical, large cap versus small cap. ये जो इतना polarization हमने देखा last 10-12 years में, next 10-12 years are likely to be different. The kind of debt ratios that every country has got, I mean, in US it's the highest since 1945, World War II. Same is the case with a lot of other countries, including us. The only way you can repay this debt is work on the denominator, which is higher nominal GDP growth, which is a combination of real GDP growth plus inflation. You have to get inflation back and you have to get growth back, and which will be good for a lot of sectors. So I think a polarization, मेरा ऐसा view है, the breadth of the market will increase. And India में a lot of interesting things have happened. Nilesh bhai discussed about it. Some of the other people discussed about it. RBI has done an absolutely wonderful job in terms of unleashing the liquidity, or the way they have cut the rates, the way they did the moratorium, restructuring, a lot of prudential norm change, and trying to make money cheaper and accessible to a lot of borrowers. And the government, all the reforms that have happened, together with a lot of other things. I'll take one more minute. So if you add these 5-7 things together, Ajay, you can see why I'm talking about 2003 to 7. And I think if that doesn't happen, it will be our own mistake. You add few things. What the RBI has done, absolutely unconventional, unorthodox, so bold and so creative, and which will go a long way. I mean, the kind of liquidity that they are keeping in the banking system. You add the reforms that have been undertaken in last 5-7 years, and particularly in last 6-9 months, including the labor code. मतलब जितना एजेंडा होता था, मतलब जितने बिजनेस चैम्बर्स ने लास्ट 20 साल में मेमोरेंडम भेजे होंगे लेजिस्लेटिव रिफॉर्म्स के, more or less to a large extent it has been GST to IBC to labor code to the agri reforms. Everything has been done. Look at the new geopolitical global alignment where India will clearly emerge as a place to be in. You look at the strong external account where we don't have to worry about a forex crisis that we used to have every 5-7 years with the kind of foreign exchange reserves that we have got. You look at the Atmanirbhar Bharat, whatever we are doing on the PLI, etc. You had the lower corporate tax rate. Sab bhul gaye abhi, that it's 25%. I mean, this was a dream for corporate India for so long, and for a new manufacturing 15%. You add the impact of so much of liquidity and the negative borrowing cost kam ho jati hai corporates ki. Dusra, whenever we are investing, or let's say for an investor, the present value of future cash flows go up quite a bit. So for investor, every asset becomes more attractive. You add one more factor, and there are initial signs, Nilesh bhai ne bhi baat kari, that residential real estate is showing very good signs of recovery. And this is a large job creator. This has a huge multiplier effect. If data is the new oil in the virtual world, with the kind of big data India has got and the capability that we have made, is going to be another opportunity. And you add the global tailwind, which I talked about, Biden, fiscal stimulus, maybe inflation coming back in the world, inflation coming back in the world. And the last point I would add is, and taking the clue from what happened, some of these things between 98, 2003, and we saw the bull market from 2003 to 8, is what corporates have done. And Ajay, you would remember that during those tough times to 98 to 2003, banks ने clean up किया अपना books का, NPA को problem को resolve किया, healthy balance sheets हो गई जो अभी banking sector की situation है. And corporate sector deleveraged the balance sheet. They focused on cost rationalization. How do we do business with better technology or better processes? And in last 6-9 months, when you meet company management and you see the way people have rationalized the cost, people with the way they are looking at virtualization of processes, etc., and the innovation that is coming, this could lead to a new cycle of growth and new cycle of profitability. Now, this is a very rosy picture I have painted. There are few risks. Agar second wave aa gaya COVID ka, then everything gets deferred. If we don't do a little bit of more fiscal stimulus, then I think again, because still for confidence to come back, India will grow at 7-8%, government has to spend more money. There could be a geopolitical risk, which is difficult to predict today. Execute you have to execute it very well. So few of these things have to fall in place. But if all of us work together, and if we do some good stimulus ki demand or create karke, if we give confidence to businesses that India can have a long cycle of growth back, I think we should not be surprised if we can create that 2003 to 7. I mean, not that magnitude ki Sensex 3000 se 21000 chala jayega, but even if where the interest rates are, if we can expect double digit, that itself will be very good.
Wonderful.
And now we want to listen to the views of Ajay Baggaji also. I request my colleague, Mr. Naveen Mathur, the chairman of CPI West, to formally call Mr. Ajay Bagga to give his opinion. Mr. Naveen Mathur.
Thank you, Sabharwal sir. I was in this particular session since for morning, and I feel it's been excellent session, the first one and this one, where Navneet and Nilesh Bhai shared their views. I think Mr. Bagga also has that, I would say, a great experience for the capital markets, and he's part of the industry all throughout. So people would like to hear what Mr. Bagga says, and therefore I request Ajay ji to please share certain thoughts of his to share with the investors who are part of this particular Zoom call. Thank you.
In front of stalwarts like Nilesh Bhai, Navneet ji, I prefer this role as the moderator because I feel I can get a lot out of them. So this is unanticipated, but I'll talk for half a minute. But
after you speak, you still have the time to talk to Mr. Manoj for other things also.
Because I had a rapid fire planned for Navneet ji, so we'll go back to that. But thank you, Naveen ji. Overall, my views are very similar to what both of them said. But I would say, as addressing investors directly, what I would like to say, one is keep the optimism. We are very lucky. India is a growth stock. India, we have the demographics, we have the natural resources, we have a strong government backing, we have a very enlightened monetary authority, and a lot of positives going for us, where the world will really beat a path to us. We have to get quite a few things right. It's not that it's all rosy. So law and order and rule of law, enforceability of contracts is something which is holding us back, that we will solve for eventually. If you see sectors which could leapfrog over the domestic issues like IT and pharma, chemicals, you have seen the kind of success they have given. Now we have to drive that success within India. So one is the optimism. Second is staying the course. Over 20 years, 30 years, if you look at the market, if you lose the top 40-day returns, you lose half the returns. If you lose the top 60-day returns over 20 years, you lose most of the returns in the market. That is what we have seen in November. That is what we see in April, what we saw in April. So whoever was out of the market, they are left rubbing their hands. Having said that, the third part is, this is not the last bus or the last train departing. Every 1 month there is a new train, new bus. So the best time to start investing is today. That is what I tell every investor. Whatever you can afford, whatever you can save, please do extreme savings and participate in India. If you see the way last time Navneet ji had mentioned this, FIIs are buying up India, VCs, PEs are buying. You look at our infrastructure companies got loaded with debt because they were being funded by banks with their alcos were totally imbalanced. So the banks could not lend for 20 years. The insurance sector was not so much into infra. We needed infrastructure financial institutions who could have given loans where you don't have to repay till the project comes on stream. And what has happened then is the Blackstones, the Brookfields, all these are buying up your infrastructure. And so obviously the infrastructure is very attractive because the smartest investors are coming in, but the Indian investors are losing out. Fourth, I would say a lot of innovation will be needed on the part of the government, be it COVID bonds. There is so much liquidity around, and there is a hunt for yield. $17 trillion of global bonds are at negative yields. So if you can provide a path for the world to come and invest into India, we'll not be capital starved at all. So overall, golden period for India, good strong period for the global economy. Fundamentals and flows both are improving. Huge amount of liquidity, which gives a backstop and safety net to the markets. My forecast, with a pinch of salt or a mountain of salt, we'll have a much better 2021. Touch wood, touch wood, touch wood. सबका ठीक रहे अगले साल, but we'll have a much better year. Naveen ji.
I will like Mr. Ajay Gargji, our chairman of the North CPI, if he has any question for Mr. Ajay Bagga or Mr. Navneet Manot. Mr. Ajay Garg.
Better to Mr. Navneet Manot.
चलिए तो that decision we have to leave to Mr. Ajay Garg.
Ajay Garg, हाँ जी.
Probably his link is. चलिए Ajay ji, you continue. Ajay ji, you continue with that.
Or if
Ajay ji, rapid fire is awaited.
Okay.
Ajay Bagga ji, continue with your rapid fire.
Okay, sir, with your permission. Thank you, Vadva ji. So, Navneet ji, rapid fire, as we do every time with you. Large cap or small cap?
India is small cap है यार. We are like $2.5 trillion. वहाँ पे एक company $2 trillion है. So I mean, the entire India. I think it's company specific, not like large or mid. Wherever there is agility and nimbleness, it's not about size and stability.
Okay. Financials or IT?
I think cyclicals overall should do well. IT में there is a structural opportunity for few set of players who are more innovative. But I think overall cyclicals over the next several years should do well.
US dollar level next year, the dollar index, the DXY, 92 to 95 or 89 or lower?
ये तो कुछ ज़्यादा ही tough कर रहे हो, but in general over the next several years, I'm in the camp that dollar will be weaker.
Dollar will
it should be good for the emerging markets. 1 year point to point, मतलब इस साल हमने देखा है that forecast नहीं करना चाहिए. If one thing we have learned in 2020 is then don't do short-term forecast. Yeah.
Normalization of the Indian economy, 2021 or 2022 or beyond?
I think I've already started that. Maybe some bit of his pent-up demand and may slow down a little bit. But I think if we get a dose of stimulus, I think 21 could be like, beginning of a new growth cycle.
Okay. Then RBI rate cuts left over in this financial year or no more rate cuts?
Not much, actually. I think the focus will be on transmission of whatever they've already provided. They have done an extraordinarily good job in terms of creating liquidity. I think their focus would be on how do we percolate the impact of that down.
What do I do with my gold holdings? It's come from 55,000 to 48. Sell it all or it will go to 60 next year.
So use that as a hedge in your portfolio. If something goes really wrong, you have a second, third, fourth wave of COVID or growth doesn't come back or there is a geopolitical risk, something nasty China does anywhere. For that reason, have a little bit of gold, but actually you should pray that gold doesn't do well because in that case, the rest of your portfolio will do pretty well. If the gold does extraordinarily well, you have to get worried about rest of your portfolio.
Very, very nice insight. Fiscal deficit, we've seen the numbers yesterday. So actually government has not really overspent. So, and they're holding the 3.5%. You think we are okay on the fiscal side for this
So
year?
this year it was expected, yeah. Matlab revenues and both on the expenditure side, they've done a reasonably good job given the situation. And I think this is a year, Ajay, and you have been giving the same views that this is a year where we should not look at these numbers. It's an extraordinary year. I think this is a time when government should spend money, get more confidence among the consumers and businesses, go and consume, go and invest. Life will be better next year and for next several years. So we should not worry too much this year.
And the rebound, should I buy like hotels, airlines, cinemas, all the sectors which got very badly impacted, restaurants? Should I go ahead and buy?
The businesses that are the worst impacted by COVID, the survivors in those businesses, because creative destruction is going to be highest. Look at the number of restaurants that have permanently closed down, or some of the airlines would be in trouble. The people who will survive, they will do extraordinarily well, because for next several years, there is a run for them. There will be less new capacity addition, and businesses at some point in time will come back to normalcy. In a country of 1.3 billion people, it's not that we'll only have the Zoom call. I'm sure I'm looking forward to a CPAI event where we have coffee together, we break the bread together. मतलब वो सबरवाल जी से या वाधवा जी से मतलब beyond a point वो virtual में मतलब that joy is not there.
Yeah. No, it was a very different feeling to be in real world, the networking and the joy of meeting people on the sidelines. So that is true.
Very shortly.
Actually, the virtual world can work. Happen only once you meet people physically, face to face.
Absolutely.
So it's a good mix of both. I think virtual also has its own advantages. Climate change के लिए better है, pollute नहीं करते हैं. But at the same time, the in-person interaction is very critical. That's how human beings have been for thousands of years. And मेरे को नहीं लगता है कि change हो जाएगा. हम खाली virtual meeting ही करेंगे.
So go short on Zoom.
So I don't know specific company fundamentals, but काफी जो COVID related beneficiaries है, I think there would be some bit of sanity coming back. I think in some of those, some normalcy coming back there also.
Now, Niji, on Atmanirbhar theme, what are the industry? What are the sectors where you any?
I think overall, if we are able to get manufacturing back, if we are able to get a lot of import substitution here, if we are able to get the export growth back, then there are a lot of sectors in the overall industrials, or whether it's capital goods, engineering, construction, and the direct beneficiaries, which are like electronics, chemicals, pharmaceuticals, where government is giving the auto ancillaries, light industrials, and all. Large number of them would be a beneficiary. But कई बार ऐसा होता है, some of these thematic we have seen right from 90s to now, that some of these top down call, अगर 10 साल पहले किसी ने बोला होता that यार telecom में the penetration will go from 10 crore mobile phone to 100 crore mobile phone, data consumption will go up so much, but many telecom companies did not make money. I mean, because then you also get a lot of competition. I think you have to look at each business and the competitive advantage and how they generate return on capital employed for their the stakeholders, or the return on equity. So sometimes some of these top down ki bajay, I think, as I've been saying, that look at bottom up where who could be a beneficiary. But in Atmanirbhar, if we play our cards right, I think there's a lot of opportunity across a lot of sectors in India.
Now I will just intervene and request my senior colleague, Mr. Kamlesh Shah, the National Vice President from Share India of CPI, to give a concluding remarks and formal vote of thanks. Mr. Kamlesh Shah.
Ajay ji, Navneet ji, Nilesh ji, Ashok ji, Wadhwa ji, Sabarwal ji, my colleagues from CPAI, and all the participants, a very good afternoon. Investor Week is very well celebrated by all the stakeholders. We have more than 500 events during this week. A web-based program has provided opportunity for larger participation from comfort of their home or offices. Volatility and complex nature of the new products further necessitates investors' awareness. Over a period of time, way of investment has changed. Role of experts and fund manager is acknowledged. new generation investors have started following mutual fund route and focus has shifted to index products, which accounts for nearly 85 to 90% of the market turnover. Inflow to Indian capital market has set new records. In fact, during this year alone, we have received 1.10 lakh crore rupees in terms of FPI inflows. And in November itself, we have received more than 63,000 crores of rupees. So this shows that confidence of investors across the globe in Indian economy. Size of the market is growing. COVID pandemic has further made it clear that savings and investments are imperative. Habit of small investment on regular basis builds surprising amount of capital formation and financial stability. With increase in participation, role of all the intermediaries and brokers association becomes all the more important to see that the trust and the confidence is maintained. About the excellent panel that we had today, my congratulations, and really we are thankful to them for sparing that time. Nilesh ji, it is always a pleasure to listen him. What he said is that all positive triggers are at place. We fully agree with that. And what he said about to keep optimism is very relevant in this period. Navneet ji, first of all, I would like to say best of luck for your new endeavor. You rightly said that resilience building is the most important in the new normal. Focus on management and corporate across the segment would be, a better strategy going forward. Ajay ji, you brought best out of the panelists, and all the participants have stuck to the webinar in the late afternoon on Saturday. To stay in the market is the best message that we got from you for the investor, or otherwise you will lose the gaps. Opportunity may greet you at any time, very rightly said. Rapid fire was a fun to learn. Thank you, Ajay ji, for your double role. You did wonderful work. And I would like to thank team CPAI for organizing such a wonderful seminar, web-based seminar. And thank you all the participants for your support and the confidence. Thank you.
I will like to mention that when Ashish Chauhanji was speaking, we have 300 plus participants. The peak was on YouTube and on this. And my special thanks to my chief mentor and the president of imposing the confidence in me that in a span of less than 42 hours, we could collect the Finance Ministry, the regulator, the CEO of all the exchanges, and the best of the mutual fund people also. I will just like to mention that in last 48 hours, my colleague Rishan Saini did extraordinary work with me when my senior colleagues were not sure that in a span of less than 2 days we will able to do this program. But just because of that one gentleman, I will like to mention that we had everything, a participant of 300 plus, the government, the regulator, the market participants, the exchanges, and investors at large. Thanks to, and special thanks that all of you who are here right up to this time. Thank you.
Thank you, Sabharwalji. I think the time given to Sabharwalji was only 2 days, and we were not sure whether we should have this seminar because we were not sure about the participation of investor as well as participation from all the panelists. But I think he did a wonderful job. Congratulations. And of course, ably assisted
He's
by...
a leader. He knows how to do work.
Sabharwal ji hai to mumkin hai.
सही बात यही है.
And congratulations to Mr. Dua, our president. Excellent job. And all the panelists, thank you very much.
Thank you. Thank you, Ashok ji.
Thank you.
Thank you, Sabharwal Saab. Wonderful, wonderful.
You are here with us for 3 hours. Thanks a lot.
Thank you, Jai Bhai. Namaskar.
Thank you. Thank you,
Thank you.
Bansal ji. Happy New Year to everybody. बहुत बहुत शुभकामनाएं sir.
Happy New
Thank
Year.
you, Ajay ji.
A happy 2021.
Yes, sir. Definitely happy.
Ram Sarup Agarwal ji from Hyderabad was writing too much. We had participants right from Chandigarh to Cochin and from Bhavnagar to Calcutta. And we I was just trying to see, I found that there were participants from more than 40 cities of the country.
Wow, wonderful. Your reach is awesome. Awesome.
Thank you, sir. Good day.
Thank you.